General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, Monday is down the drain. It is OE week. $7-14-25. Tomorrow is CPI. I know that for a fact. It used to be a button. It is still there. Cool. Okay. We'll just do the whole box. $8.30 CPI. Big day. CME Fed Watch. It don't matter till after tomorrow. But for the sake of habits, and while we have these habits, we look at it anyway. And it's probably like, okay, we had 95%. CPI can put it at 100%. If CPI come in crazy, it can look like the beginning of the end. 95% chance of no rate change. Earnings is starting to get back popping. We got Netflix Thursday. I mean, I could just do this, right? Because I pulled up this one thing. I've been looking for that monthly calendar too, but I usually do the day. But it's just the way that month is set up, it looks so easy just to snatch that week just like this. So we got banks tomorrow. That could provide sentiment. For earnings seasons coming up. Dollar on the daily. I love the dollar. It's finally coming up here. We've been waiting patiently for it. And look, so well behaved. Forex. Okay, we're almost to the volume imbalance. Okay, yeah, that works. Finally made it to premium. This is where I wait. Now I need a news event. Red folder news event. Two calls. A CSD on the daily. Then I can look for sales. This ain't no news. It's just like, oh, we're retracing before the news. We can like CPI can come in and just be like, yeah, everything y'all talking about, down with the dollar. Solid update. Low created at 2 a.m. Textbook ICT stuff. Solid update. Low created at 2 a.m. Textbook ICT kill zone. Weekly point of view, we didn't do anything on the weekly. No weekly liquidity was taken. Move this. So, no textbook high or low. Of the week just yet. Okay. we can kind of see from this leg what we got going on here. Bullish S&T push up. This is the current range. Last high broken. Yeah, we do need some daily rebalance. We took out a daily high. We took out Friday's high. We opened, took out Friday's low, and then took out Friday's high. So some liquidity was taken today. For buy side liquidity. But note we're still in that range. Keep in mind, CP tomorrow and the condition the market was kept in. Before the news event. How price was held before CPI. Last FEG, that was any cool buys from here. I still like that. Yeah, but just a lot of stuff. Look, I got buys from here too. Take off these buys from here. Just buy from somewhere. Alright. This is the main attraction. This is still, it's been used a couple times. Highest up candle is this candle. Lowest down candle is this candle. So typical range stuff here. I'm not gonna mark that on this H4. It's just too much going on already. Trapped order flow. Low probability range. I'm thinking AMD. With CPI. Thinking AMD delivery with CPI tomorrow. Alright, I should be able to mark out this range better here. So let's do this. Highest up candle. In the range. And where is the lowest down candle? Here. Any down candles that's lower. We swept that. I mean, this down candle's low is a little bit lower. Let's only focus on the bodies here. We kind of had us, let's see what this, we can do purple. So we can do blue. How does that look? It looks doable. So just the range that we in though, from here to here. We still haven't took this low prime liquidity. This high has been ran already. This is the actual high. This low that we came right here, we haven't took it. It's not a target for tomorrow though. CPI should come in good. Inflation is over. We should take the high. Something about this week is telling me to sell though. Like leave this and come back for this later. Sell. But nothing is telling me sell as far as the chart. The chart's telling me buy. Earnings is coming up. People buy into earnings. CPI should be good. People buy into that. So logically, it's like go for the highs. Not even Thursday's target no more. It's just a target. Like, let it go. Let's go here. Because the market really does want to go up. Maybe here first and then here, which I would so much prefer. If we just sell off and just drop 1,000 points, I would like that too. I mean, I really don't have no preference. But when you see ranges like this, we really could just bounce, come back, bounce, come back. We really could play this. We got that low, we got that high. We never came to get this low. So look, low, high, higher, high. Both sides of this range is swept. This week, previous week's high and low still intact. Inside week, push down, push up. We could come here, just sell off, and then come. There's too many ways. I'm picking this. It's kind of far, but the market's bullish. I want to sell, but there's nothing saying sell yet. Go up. Get it over with. Raid, then trade. I can textbook, oh, this will be Friday's high, my mile marker from the day, or what's the, I wick this day. This is it. It's Friday's high. Sales below that is logical. Like, anything above that, no, we got to go up there. It's just too much going on. We took Friday's low, Friday's high. Friday EQ might be something to look at tomorrow too, if we do come down here. Really, from here to here. Just a little bit too. What's this say? Labels right top, center? Nope. Right. Put them in middle. That's better. All right, cool. That'll work. Below Friday's high, Friday's EQ, Friday's low is a mile marker. Zone down here, zone up here. As long as we stand below this, I'm not surprised. Even this that wicked above, we still came back and reclaimed this as a zone. So that's a zone. Reclaim order block. This is a reclaim bullish order block. $23, 179.75. $23, 179.75. That's my target. New all-time high. To be honest, I want to sell, but the market is not saying sell. We hold it in the range. CPIs tomorrow. We will use the news for manipulation. And move fast with interbank intention. I don't want to say macro order flow because we could go down. To be honest, I want to say boom, boom, boom. How do I do to be honest on this thing? Like, said, but the market's not saying sell. We hold it in the range. CPS tomorrow. Use this news for manipulation. And move fast with interbank intention. A big move fast. That should get us on side with direction for the entire week. One time high. To be honest, I'm saying with the market not saying sell, we hold the range. Use the news for manipulation and a big move fast. That should get us on side with the direction for the entire week. Direction has been up. Higher until we show some true confirmation to sell. All sales will be nimble until confirmation. Large said, waiting for CPI. Then watch. Monday, let's go. All right, that's that on that. Y'all have a good day. Peace.